the Denver Radio Real Estate Show. I'm Cheryl Garlock with Colorado Front Range Properties, and wow, I am so glad you guys are here today. My very special guest is Chris Zadra with Homebridge Financial Services. And Chris, welcome to the show.
Thank you so much for having me again. I really appreciate the opportunity.
Yeah, and you know what? You always have such valuable information to share with everybody. You know, because it is the summer season, Chris, I really want to talk a little bit about people getting ready for the market shopping, because it creeps up on people really, really, really fast. Let's talk about some steps that a consumer can take to get prepared. Particularly, let's first identify the steps if they are renting a home and needing to go forward with buying, because I think it's different a little bit if you own a home and then buying. So let's talk about the person who's renting a home and now needs to look forward to buying.
Definitely. You know, when you're renting a home, really the biggest things you got to look at. One of the things that's happened with this market, Shirley, as you know, we're one of the top 10 cities in the country that is seeing kind of a big recovery. And so, the mentality we had last summer was, you can kind of mess around a little bit, find the perfect house, all that kind of stuff. Today, I mean, literally, if you're not on the front porch when the listing opens up, you might be the 15th or 16th person with an offer on the property. And so what that does for us is, the first thing that most people need to do is they need to start gathering their documents. The traditional documents that we want to see from people are bank statements, and there's always kind of a 2-month rule, if you will.
Yeah, that's
for
right.
most documents. So bank statements, pay stubs they usually want to see for 30 days, W-2s, and tax returns. I mean, that's kind of the general, if you're self-employed, obviously we're going to see some different things, but that's the stuff that people want to get a hold of. And where a lot of people run into problems today is pay stubs aren't something that they get. They get a electronic transfer. They might actually have, they don't get a pay stub in the mail. And so some people have to do a little bit of digging to get a hold of that stuff.
Oh, I think that's true. I think a lot of times they have to go online to their company's website and maybe get into their own account or whatever to print out their pay stubs there. But you could not be more right. I am telling you guys, when you go for starting out to look for a home, whether you're renting one or you're owning one and then needing to sell it, you really got to have these ducks in a row. So do yourselves a favor. You will save yourselves a lot of anguish later. And when you've got a lot of people out there shopping for the same thing, there's a lot of anguish out there.
Yeah, you got to be prepared. Yeah. And then, the next thing that you've got to really do is, and again, this kind of goes back to the, what we saw 5 or 6 years ago, is you have to talk to your lender and find a real estate agent. And a lot of times you can do that kind of together.
Yes.
A lot of folks will find a real estate agent. In Colorado, the buyer's agent is typically covered by the listing agent, the person selling the home.
You mean the fee that's paid to them?
Correct.
Yes.
Correct. So there is absolutely no reason, in my opinion, why you should not have an agent, first off. Second off, a lot of times that agent has their preferred lender, if you will, or somebody, or a couple of folks that they've worked with, that they trust, that they know are going to do a great job. And really, it's important to get in front of that lender, because there's so many crazy rules that don't necessarily make sense to the average Joe, but make sense when you're starting to look at probably the biggest debt somebody's going to take on. Deposits, where does their income come from? Is there income overtime? All that kind of stuff. And so when you sit down with the lender, prior to looking at that house, not only can you make sure all of your ducks are in a row there, but rather than having you as an agent or your realtor out there, obviously looking at a $300,000 or $400,000 house, and you may only qualify for a $200,000 house.
Yeah.
So, and as you know, once people see that higher end home, typically it's hard to go back to the lower end home.
It is really hard to go back to that lower end home there when you already got your champagne taste in a beer budget wallet, as we like to say sometimes.
Absolutely.
That's what happens there. But you're absolutely right. You got to really, really be prepared. I tell you right now, I own an iPad, and thank God I do, because I'm writing contracts on the iPad, and you are not a kid on the doorstep. You're not kidding. So you guys really have to go ahead and be prepared. And the reason to meet with the lender, there's a lot of reasons. You've got to really meet with them. At least, for goodness sakes, pick a solid lender that can go in and give you top quality service, pay attention to your particular needs. You also got to do your job and get them to documentation. Don't you think that's the number one thing that brings things down sometimes?
Absolutely. Here's the thing I always tell people is you can't, unfortunately, it's hard to hide stuff from us. Before we had all the computers and stuff, you might be able to hide a credit card or something like that you had or you just opened. But, you want to be truthful with your loan officer. You want to share with them the information. Let them kind of make the decision on how they want to construct stuff, because obviously, we've got to do things within certain parameters, and trying to, as you find out from people as you're going through that process that, oh, here's why this happened, and instead of finding it all out at once, you get yourself in a position where it starts to become more and more difficult to get that approval done sometimes.
Absolutely. I got to tell you, Chris, I just did a deal here real recently, and I got to tell you, the small ones are sometimes the hardest ones.
Oh my gosh, yeah, and it's if you sit back and look, usually the younger crowd, what I'm finding in today's world is, my parents, us, those sorts of things. Most of us have a checking account, savings account.
Yeah.
Most
right.
of the kids, that 18 to basically 30 range, they've got 15 bank accounts, and most of them have $20 in them, and they're kind of consolidating everything to put all this stuff together. And the hard part is that just makes a paper nightmare from my side of the world, because again, investors are looking for, where's their cash coming from? Do they qualify? The industry's gone away. Back when we had all the issues we had,
Yep.
the mentality of our industry was somebody's willingness to pay. So what that means is, do they have good credit? Do they have equity? They're willing to make payments even if times get tough. Well, obviously we found out that didn't work right. Now we've gone back to more what our parents saw, and that would be the ability to pay. So, a great example of that is I've had customers that come in, they might have $3 million in the bank.
Yeah.
But they've got a great accountant who shows Uncle Sam
That they
they've
have
got
no
all these
money.
fantastic write-offs, and they don't make a lot of income.
Yeah.
And
Didn't
it's
we have
actually
a political figure not too long
Yeah.
ago running for office that fell into that same
absolutely.
category?
But it makes it tough because that person is going to be harder to qualify, believe it or not, than maybe the
person-
family that's working a typical job where they're getting paid $15 an hour or $20 an hour, whatever that is,
Right.
because that income, that the ability to pay is not necessarily there.
Absolutely, that's really, really, really true there. And sometimes when you do this combining, you can do the combining with the, I call them a kitty condo loan,
Yep.
kind of deal. But really, what it is, it doesn't mean you're really buying a condo. It just means that kids are getting their parents to co-borrow and that sort of thing there. But and that does work and that sort of thing. But you have a lot of paperwork that you have to go through. And like I said, I just had this recent deal that took 2 underwriters.
Yeah.
2 underwriters, you guys. So they want to make the loans, that sort of thing there, and that kind of a thing there. Isn't that right, Chris?
Yeah, and here's the other thing that you kind of also go down with that road is, there's options out there, and there's so many myths. We've talked about this before. The myths that are out there. So when you're talking to your lender, they're going to also not necessarily they'll put together all the options and let you know that, hey, this is the best way to go, or this is the best way to go, rather than what your assumptions might be.
Wow. I got to tell you guys something. Chris is really a good loan officer that you want to go ahead and connect with, even just for a phone call. Call him just to bounce ideas off of. Go to denverrealty.com. Click on, Denver Radio tab, and you'll find his show guest information. We'll be right back with more from the Denver Radio Real Estate Show.